That's a great thing. And market overview and trading research is going to start right now. So how about things firing off in the Middle East last night?
Yeah, why? What happened over there? I mean,
Hezbollah launched a bunch of rockets. Israel had a preemptive strike on a bunch of their missile sites, and oil's up $1 this morning, or XOM was up $1 this morning. And then this, RFK switching to Trump.
yeah, that's pretty big. I think that's pretty big news, man. I mean,
Gigantic.
because I mean, the guy's a freaking Kennedy, but you know what? If John Kennedy was alive today, or Bill Clinton, or these guys would not be Democrats if they were around today. They're too centrist. But this is yeah, I mean, it's kind of interesting. Now, I have kind of have a little bit of an issue with Robert Kennedy Jr., and I'll tell you why. Because I grew up in Greenwich, and there was this girl who got murdered back, I think it was like 1973 or 1974. And anyway, there was these two rich kids, the two Skakels, lived next door, and they each had crushes on her. One was jealous of the other one, or whatever. And her name was Martha Moxley. So anyway, she got murdered with a left-handed golf club, which, by the way, the police misplaced. So everyone thinks that they paid off the Greenwich police chief. That's at least what my grandmother used to say. But anyway, so Skakel got convicted. The Skakels they owned Imperial Chemical. They were like one of the richest families in the country, even richer than the Kennedys. And the connection is that one of the Kennedy's daughters, Robert Kennedy, Bobby Kennedy, this guy's father married Ethel Skakel, right? So that's how the families were interacting. But he came up and he was putting out all this like nonsense about how these guys came up from New York City, from the Bronx, and they did it, and blah, 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 blah. And I don't know. I just thought that was like, I just thought that was like a, just kind of a little bit beyond the pale there to push an obviously bogus theory, on something that's like so important,
I saw the movie.
Anyway, whatever. I mean,
I saw the movie of that Martha Moxley story with Sean Penn was in that, I believe. And yes, Jason, Bill Clinton is the Democrat, not still alive and a Democrat. He is the Democrat.
Speaking of still alive, man, I can't believe Jimmy Carter is still alive. At least as far as I know, he is.
No, he is. Jimmy's hanging on.
Yeah, dude. They put him in the hospice. It was like over a year ago.
Yeah.
Oh, and how about this, man? Talk about an embarrassment. They're setting up SpaceX to save these Boeing people.
Yeah. I think they're actually going to eject the space capsule without having to have anybody in it, though. I think they figured out how to do that.
Boy, well, that just shows you how private industry is better than the government. Anyway, just a couple of interesting things to look at here. I was just kind of looking at this BLDR, Builder's First Source. So the lesson here is that there are a lot of different ways to measure momentum. All right. Momentum is the definition of how far something has moved from time period A to time period B. So that's an important distinction there, because if something, let's just say something moves a lot going in one direction. So let's just say it ripped higher. All right. Hold on one second. But then all of a sudden it reverses and ends up back where it started. Like, let's just say this particular stock did something like this. All right, so let's just say it went like that, and then it went like that. Now, this would probably be oversold. But if we count these time periods, let's just say that this is where it ends. So we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Let's just make it here for the RSI. All right. So the RSI here would show that the momentum is neutral because it's measuring from here to here. It's not accounting for this big move higher and this big move lower. It's just this time period to that time period. Now, if your RSI, these momentum indicators, they all come with defaults. The default here is 14. So if you were to change this and go back to, say, here and have 1, 2, 3, 4, 5, 6, 7, 8, if you were to change this default setting to 8, like that, which is easy to do, you would see that it is very oversold. So this is part of learning the nuances with these different indicators. Now, what I was going to say on this is that this red line here shows the upper Bollinger Band. So this is 2 standard deviations above the 20-day moving average. All right. So a lot of trading is based on statistics and moving. A standard deviation is a statistical concept. So statistics tell us 95% of trading should be within 2 standard deviations of the mean. So if we exceed this threshold, that draws sellers in. But again, this is also something that the default settings might not work best on a different stock. At a different stock, you might want to use 1.9 standard deviations or 2.3, or use the length of 30 days instead of 20 days, or maybe a length of 10 days. It's just called optimization. Now, if we look down here, we see the RSI indicator, and this shows that this thing is overbought as well. Well, the Bollinger Band and the RSI are each ways to measure momentum. Is one of them better than the other? I don't really know. I think you got to pick what you like and what you feel comfortable with, and don't pick too many. This is moving average, convergence, divergence. So I would say, yeah, this is kind of showing that it's overbought. Commodity Channel Index is another one that's pretty popular. This one here, Commodity Channel Index. See, it says it's overbought. So the moral to the story is, I think you should just pick 2 or 3 momentum indicators and get really comfortable with them and understand all the nuances, because a lot of times I see newer traders, they have like 10 momentum indicators on their charts. And it's kind of ridiculous because it all shows they're just different ways of measuring the same thing.
Should be a good on USO this morning, Jonathan, with the war went well with the Israel tension.
Yeah, Bill Clinton is still alive, man. That's the big dog, man. I know I've told you guys the story before, but someone I know is a cop down in Harlem where Clinton's office was. This was like 15 years ago. And apparently his girlfriend got into a car accident on the way to his office. So this guy, being a cop, just out of curiosity, went to look for the report, and it wasn't there. It didn't exist. It's like,
oh, yeah.
So anyway.
Yeah, there's a lot of reports on Bill that don't exist. There's a lot of reports on any of those politicians that don't exist.
And what did the Secret Service call his girlfriend, his neighbor in Chappaqua over there? They call her like the Terminator or something. You know how the Secret Service has a nickname for everyone?
Yeah.
Anyway, this I thought was an interesting chart of Intuit here, because what we see here is, we know that when things get to be overbought, now, like right here, even though this RSI does not say we're overbought, I would say that this is overbought. So if we count back 14 sessions, we're probably getting over here. So we're measuring here to here, not factoring in that. So when we get overbought and we get to resistance, there tends to be sell-off. What makes these guys kind of interesting is you get the reversal pattern and a false breakout. When it looks like something's going to get above a resistance level, and the level that was resistance doesn't convert into support, you can get a really rapid move back like this. And this is what we call a false breakout. It looks like it's going to break out, but things change really quickly. And false breakouts tend to be good contrarian signals. So look at how good that one was there. Same thing over here. So this is your bearish engulfing pattern, right? It showed that the bulls are pushing this higher. And on this morning, you would have thought it was going to be another blue day because the opening price was higher than the prior day's closing price. But by the close, the sellers hammered it and drove it all the way back, and importantly, back below the opening and the closing price of the prior days, which really just shows that they're really aggressive. So anyway, two kind of textbook things here, actually three. I mean, you could say that this was a false breakout. This opened here, looked like it was going to break out, got all the way up to here, but by the close, it was down to here. So it's not the same, I guess, I don't know what the right word I'm looking for is. I guess the same degree as this, but it shows the same thing. I mean, it looked like we were going to break out, and then we reversed and we came back in. All right, so now NVIDIA is reporting on Wednesday. So everyone's talking about NVIDIA. Some interesting chart stuff going on here too. One is that this could be your kind of your descending triangle pattern, right? A lot of times when you get to a support level, see how this was support, and you want to know whether the support was going to break or not. If you look into the past and you see that the recent highs formed at lower prices than the prior highs, that tells us that as time is going by, the sellers are getting more aggressive. They're willing to sell at lower prices. So even though this doesn't look like your perfect descending triangle pattern, it's not about textbook patterns. It's about what the patterns illustrate. So this illustrates that the buyers are willing to hold the line, so to speak, and be patient. But at the same time, the sellers are getting more aggressive. And then we ended up breaking the support and going lower. Now, here's a bearish engulfing pattern that worked out, right? Looked like it was going to be another up day, opened here, but by the close got all the way down to there. Here's one here. Looked like it was going to be another up day, but by the close, we were all down there. So those two worked out. This one here worked out, but this one here didn't. All right. So that just shows you that these patterns are not infallible, right? So it looked like it was going to be another up day, but by the close, we got down to here. And another thing you could kind of say about this too, to really get kind of nitpicky, is the engulfing pattern is a reversal pattern. It has to come at the end of a trend. If something is going just sideways and you see like this, I mean, is it a bearish engulfing pattern? I mean, it could be, but they usually happen at the end of a trend, at the end of like a big move. I guess you could say that this is a big trend and then we had some consolidation. But anyway, regardless of whether it's textbook or not, it shows us that there's aggressive sellers are lurking in the sidelines. So, we get this report on Wednesday, and a lot of times things beat earnings and they have really good numbers, but the stocks go down anyway. And that's an example of what we would call like a crowded trade. Or if you've ever heard the expression, buy in the rumor, sell on the news. What happens is because people are anticipating good news or a good number, they go out and they load the boat and they get full positions on the stock. Then when the news comes out, if it's really good, well, they got a full position. They're not going to be doing anything. Like in the institutional world, you generally weight your portfolio by a percentage. So if you say, all right, I'm going to take a 5% position in NVIDIA, once you get that 5% position, you're full, you're done. So you're not going to buy any more regardless of what happens. And then sometimes you get the momentum traders buy it ahead because they think it's going to move up on the earnings. And when it doesn't move, they start to look around and say, hey, this doesn't look like it's going to work out as I thought it was. I better sell this. But the stock's not going up because the buyers are all full. So these sellers, these people that were buyers that now want to be sellers, are going to have a hard time finding buyers. So they're going to have to push the stock down. So sometimes you get good news and the stock ends up going down. And it's the opposite the other way. Sometimes you get bad news and the stock goes up. And that's if everyone who wanted to sell sells and there's no one left to sell. Well, then the only place the market can go is up.
So, Mary, that was SPY on Friday. It was basically Powell talking about how kind of giving a little inclination that rate cuts are going to happen. So it reversed and it started going back up. And then, you had Apple was doing good. NVIDIA was doing good. So a lot of good strength in the tech.
Well, I think a big part of it, too, is because of the job number there. It's, the job market is not nearly as good. I mean, that's the reduction of 30% of the jobs that the BLS thought that we had. So that gives the Fed more, I guess, magnitude or odds are that they're going to increase. That they're going to cut rates more than once. So I did a little bit of research, but I couldn't find out that much. But that was the biggest revision, I think, since like 2008. So that was a big revision.
Huge.
Yeah. Anyway, so now this is an example here of, now we could talk about there's problems in the Middle East with Israel, and conflict escalates, whatever. But if you guys come here every morning, you know that we've been looking for a bounce in oil, and it has nothing to do with the tensions in the Middle East. It's because we got to this price level that had been support before. You don't need to be a market guru to see this, right? We get to support, we find support at the level that was support before. So how does this happen? Well, there's people who sold at the support level who regret doing so when the price goes up. So when it finally gets back to their price level, they say, you know what? I can buy this back at the same price I sold it at. I'm going to. So that forms support. Remorseful sellers place and buy orders. Now, sometimes we rally off of support. That happens when some of these buyers start to get worried that they're going to get outbid. They know that the sellers are going to go to whoever is willing to pay the highest price, and they don't want to miss out. So they start to raise the prices they're willing to pay. And then other people see that and do the same. And you end up with this snowball effect, which drives the price higher. Now, is this because of a technical situation? Is this because of the fundamental situation, meaning the news and the tension over there? I mean, is it a chicken and the egg kind of a thing? Does the market predict what's going to happen? I mean, I don't know. I don't think anyone really knows. But I think as a trader, you got to kind of just stick with the mindset that this stuff gets moved on short-term trading. See, even if you're a long-term trader, right? Let's just say you're someone who, all right, let me start again. So we know these patterns are formed by human emotions, okay? Now and we also know that like 90% of trading that happens in commodities is just trading. It's just short-term trading or maybe swing trading. It's not people that want to take a long-term position. Now, let's just say you're some big trucking company and you want to lock in the price of oil. So you want to get oil for delivery in 6 months at the same price that it's at now because you think oil is going to go higher. Or at the very least, you want to hedge yourself, right? Well, those people would probably have an account at some commodities broker somewhere, and they would call them up and they would say, hey, I want to buy these futures. And eventually those futures, that order is going to end up on the trading desk. And who is running the trading desk but humans who are subject to this short-term stuff? Someone might say, these guys are buying for the long term, but the price is trending lower, so I'm not going to jump in yet. But if it gets to this level that was support before, that's when I'm going to jump in because I know that there tends to be supportive form of support levels. So I think it's easier if you kind of just forget the news because a lot of times they're wrong. And sometimes you can see like you'll get conflicting stories, oil up on increasing, storage numbers. And then the next article is like oil down on increasing storage numbers.
Mark, give Jonathan your levels on USO while we're in oil.
Oh, yeah, USO. So what is this? This is the United States Oil Fund. Well, you got to remember that this is not going to track the future exactly because the future, they have different hours, right? The futures are basically open 24/7. Like I think if we look over here, market open, I think this is measuring from midnight Eastern time to where we are now. Whereas USO has not opened yet, but when it opens, it's going to open much higher. Or if it's trading in the pre-market, it's going to be trading much higher. Yeah, see in the pre-market, it's trading higher.
Oh, that's a nice bump.
Because it's following oil. So a lot of times when you're trading these commodity-based ETFs, I guess different things will work for different people, but I think you're better off like watching the commodity, even though you're trading the ETF. So if we go back now and look at the futures, the commodity futures, I use the terms interchangeably. If we got up to around here, and there's a good chance we will. It's only another $3. Maybe there's a little bit of consolidation because this is a pretty big move, but I don't see anything in here that looks like there's a chance that there's going to be some important levels to look at here. Maybe a little bit right here, which is where we are now, actually. See, it was the closing price, the opening price, the low, and the opening price. But if we get above this little bump here, I think we could get up get up to about here. So 79.70 on oil would correspond to if oil got there, this would probably get up to here, which is only another 78, 70. Yeah, it's only another about $1 higher. But if oil keeps going up, right, this will probably just, all right, let's look at it this way. So this is about 1.3% above where it's trading in the pre-market. But that USO is going to follow oil. So the price levels aren't going to be as important over there as in a typical security. If oil makes it up to what I think is going to be the next peak up here, that's about a 3.8% move or 3.7% move. So if oil keeps going up, maybe there's a little bit of resistance here because there are people that are trading this that maybe don't watch oil. But ultimately, if oil keeps going up, it'll pull it right through this. Commodities-based ETFs and companies are a little bit of a different animal than your regular companies because their valuation changes based on the price of the commodity, right? Because like if you're ExxonMobil, you have big stockpiles of oil. So if the price of oil goes up, your company becomes more valuable, right? It's pretty simple.
Jason, the reason I do it is like I grew up in the convenience store and gas station business, so I understand oil, and so I trade it. If I'm not trading it every day, I'm in it every day. I absolutely love trading natural gas and oil.
Yeah, and also too, this is really more short-term stuff. I don't know where this stuff is going to be in a year or so. I do think things are going to really get hairy over there in the Middle East.
Yeah.
I mean, I know this it's just been this like kind of, been going on forever, but I mean, the fact that Israel could take out that guy when he was in Iran is still pretty incredible, man.
It's
Like
pretty
they had a
impressive.
bomb in the guy's room that they had planted there like a month before. So do they just go around planting bombs in all the Hezbollah safe houses or the terrorist safe
No, they
houses, or
had
did they
they
specifically know he was going to be there and they targeted him?
yeah, well, they had Iranians that were working with them, like people that are against the mullahs or the government or whatever they're called, and against the Ayatollah, and so they had people that were actually local Iranians that helped them do that.
Yeah, pretty wild, man. It's like real life James Bond stuff.
Serious.
Like I remember when they were killing all the Iranian nuclear scientists. Um, all right, yeah, I mean,
Lucian?
natural gas probably has a little bit more downside here. I mean, I don't know if that's enough to trade. Yeah, I guess so. It'd be 2% probably. 192. But remember, bottoms tend to be more choppy than tops because bottoms form out of fear. Tops form out of hope. So hope is much more chill. Here's a bullish engulfing
Yeah.
pattern which didn't work out. See how we engulfed all the trading, but yeah, so that one didn't work out there.
Check out this chart of Murphy's MUSA.
Murphy USA.
Take it out and scroll out the day. I'm actually on the week. It's hellacious, actually. It's just straight up almost.
What are you looking at?
I was on the week, but still the daily chart from 215 to 513 has just been beautiful.
Wow.
Right?
Retail trade specialty stores.
These are in all the Walmarts.
Oh, really?
Yeah.
Huh. I went to Walmart the other day. They didn't have what I wanted. Sucks, man. But I'll tell you, you gotta, you want to like form a bad opinion of the human race, man. Just go spend some time at Walmart.
Listen, you need to Google the people of Walmart and check out that channel mark. That's hilarious stuff.
Yeah, I know.
Wow.
I've seen it before. Gosh. All right. So anyway, what do we got here? So we're in a bit of sideways consolidation. This is a retailer, so let's just look how it's performed versus the retail industry.
Hey, I got to take this call. I got to take this call, Mark. Give me 1 second. I'll be right back.
Okay. All right. So anyway, let's just go and look at. So the equity market looks pretty good, other than the tech sector. So here's our S&P. What are we doing this morning? Up a little bit this morning. Probably going to be some resistance, another point or so higher, because and there's a bearish engulfing pattern which didn't work out. So but there's one that did work out. So it's a art and not a science, but it'll it's like anything. If the more you do it, the more comfortable you'll get, and sometimes your subconscious even kind of takes over. There's a lot of people talk about that. Like if you have a dream about buying a stock, you should buy it because maybe there's something in your subconscious saw that it was going to go up. But anyway, so the S&P, I would say probably hit some resistance up around another point, just because that's a former top over here. I mean, we're there anyway, and it's 1 point on a $560 stock. But if we look at our tech sector, so tech is kind of going sideways, and this morning it's not really doing anything. And I would guess it's going to be quiet until Nvidia reports on Wednesday. Yeah, so Nvidia has been going sideways. Microsoft really not kind of doing anything. And then Apple kind of going sideways as well. So, yeah, I mean, my guess is tech is quiet until that Nvidia comes out. But the healthcare sector looks strong. Remember, there's 11 sectors in the market. The media really just focuses on tech. But, I mean, look at this. I mean, that's a nice looking chart. What's nice about this is it's like kind of just a nice slow, kind of move higher. When you get moves that really get aggressive and move higher, they tend to reverse. But this is what you want, slow and steady. Because if something gets overstretched, it tends to, come right back. And if you want to know what the sectors are, you can go look at the S&P 500 fact sheet here. This is a really good site here, and it shows the holdings. These are the holdings of the S&P 500. So look at that. So Apple is now bigger than Microsoft, and that's pretty big amount too. 6.9 versus 6.6. And these are our sectors. Now, different sectors are in charge at different times. Most of the time it's tech, just because tech is the biggest sector, but sometimes, like now, tech is on the sidelines, and our signals are going to come from healthcare and financial services. Then you get these small ones, utilities, real estate, materials. They don't really affect the broad market because they're so small. Energy, even though it's small, can affect the broad market. When I first started doing this, energy, I believe, was the biggest sector. And that's like the days of Enron. As a matter of fact, I remember Ken Lay was actually in our office. I didn't meet with him. He was the guy that was the CEO of Enron, which is like one of the biggest scams. There's a book called The Smartest Guys in the Room, which it really does a good job telling the Enron story and how like crooked they were. Like when they would get people to come by the company, like at the end when it was blowing up, they would put all those secretaries and executive assistants on a trading desk and just tell them like, look busy. And then when they would parade people through the trading desk, they'd look around and be like, wow, this place is really busy. Meanwhile, it's just a bunch of people surfing the net. They don't even know what the hell they're doing.
Yeah.
But energy could, if big spikes in oil could have negative ramifications for other stuff here. So let's go. So healthcare, if you're long, you just stay long there.
He walked away with a
Financials
nice
might be a
golden
little bit
parachute,
overbought.
though.
What's that?
Didn't Ken Lay walk away with a nice golden parachute before he went to jail?
Yeah, but he dropped dead.
Yeah.
There was the other guy too, Fastow, who was the CFO. And basically, to make a long story short, was these guys were just kind of valuing all this stuff, based on the price of Enron. And things go up and go up and go up. I mean, there was no diversification. Things go up and up and up and up, and eventually they run out of buyers. And then at that point, the only place they can go is down. And it's really tragic because there are a lot of people that work there that, lost their
Everything.
pension plans, their retirement accounts. I mean, white collar crime has serious ramifications. People don't like on that degree. Like me and my wife were watching a show not too long ago on Madoff. And now I remember Madoff very well because when I first became an over-the-counter trader back in the late 90s, the three biggest market-making firms were Morgan Stanley, Smith Barney, and Bernie Madoff. They were one of the top firms on Wall Street for market making. And the market making, the broker-dealer side of this business never did anything wrong. They were never accused of wrongdoing. And I know people that work there that, like, they had to leave the industry because no one's going to hire someone. It's like, hey, you're a good guy and you're skilled and you'd probably do a really good job. But if people are doing due diligence on us, they're going to be like, oh, this guy worked at Enron. We don't want to have anything to do with these guys. So,
Right.
so it really tarnishes the name, even though you have nothing to do with it. But what happened was market makers trade for a spread. Well, at least they used to. You buy at one price and you sell at another. Like a spread might be $40 to 40 and a quarter. So you're buying at 40, you're selling at 40 and a quarter. You're making 25 cents a trade. When they went to decimals in the 90s, the spreads just collapsed. Like an ETF like this is actively traded. For all intents and purposes, there isn't even a spread anymore. The bid price could be the same price as the offer price. But when there's no spread, market makers can't make money. And that's when Madoff started his sham money management business. So, and look at this guy, man. His freaking son committed suicide. His other son died of cancer, which must have been related to the stress. Really, what a sleazebag, man. Jesus. That guy could have retired in 1995, and he would be considered like one of the greatest Wall Street legends ever. But he didn't. There's him, this guy Don Whedon, and then Packy Jones had Jones Trading and Whedon, and those guys basically started the over-the-counter market. Those three guys. Anyway, so healthcare looks good, financials look good. Industrials look good. I mean, another breakout here. So there's your false breakout. Now this breakout, the level that was resistance turned into support, and that sets the stage for a move higher. CrowdStrike reporting. Well, let's see here.
That was more of a Microsoft thing, Jason, but it looks like since that happened, the beginning of August here, we've had a $70 run on CrowdStrike. So
let's see. What's the question?
his thoughts on the reporting after the outage that we had that was so bad for the whole world. Remember when it shut down the airlines and everything?
Yeah, like
That was
Delta
a
Airlines.
Microsoft update that did that.
Well, let's see here. So that was what, like a week or two ago?
No, it was about a month ago.
So that must have been right here, obviously, when the stock just really collapsed.
Yeah, the tail end of July, the middle of July.
Yeah. So this this right here is a good example of how passion and emotions can overtake the market, because this price got knocked down to it was 25% below where it is now. So one could argue that's just a huge 25% overreaction. Here is what would be a bullish engulfing pattern, which this one was perfect. Open, it looked like it was going to open down there, but what happens? Everyone who wants to sell sells, and when the buyers come in, they can't find anyone to buy from, so they got to be willing to jack the price up, and that's what happened here. But sometimes, I mean, I don't know if the company's going to give us a fair analysis, but sometimes you can just go and check out their investor relations page. So you type in the symbol and then IR for investor relations. And let's see if these guys got anything to say on it. Nation states exploit legitimate credentials. All right, so I guess we'll find out more when they're reporting this week. They're reporting on Wednesday. So that should be pretty interesting, actually. Let's see if they make any. Yeah, see, they don't make any comments on it, and that's probably because their attorneys tell them not to say anything. Company says Wells Fargo upgrades his company capitalize. Oh, okay. So how's the company capitalizing on it? So Wells Fargo upgraded it. Vast majority of resellers said SentinelOne offering higher discounts. Huh. That's pretty interesting. I mean, you can't really trust. Sometimes these analysts are wrong, but generally, if they all kind of say the same thing, in general, you could kind of, the odds are relatively, I guess, better than average that that's going to be, that they're all going to be wrong. Yeah, look at that. Oh, wait, that's Palo Alto, 10 analyst rates forecast. So I brought my daughter up to Yukon yesterday, and she's living in the same dorm I lived in 35 years ago. Can you believe
That's
that?
crazy.
I went by my old room, but there was no one there. But it's funny, like, there's like on the floor, there's like the area where the phone used to be, you know. And I was telling my daughter, I'm like, look, that's where the phone used to be. She's like, what are you talking about?
Take a look at Hershey for Steve once you get done with this.
I will say this though. Here's something to look at. We are at a level where there's a good chance there's going to be some resistance. And why is that? Well, because it was a support level. So support turns into resistance. Remember, there's people who bought back here who, once they went underwater over here, a lot of them are saying, this sucks. I want to sell this piece of garbage, but I don't want to lose any money. So when it gets back to the price they bought at, you get these remorseful buyers placing sell orders, and it turns what was support into resistance. Hershey. Yeah, not much going on here. Momentum's neutral, middle of a range. So I don't know. I mean, if it heads up a little bit more, just looking at the former top, which is 200, which is not surprising, right? We like the nice round levels, or I should say the market does. And then on the bottom, I would sound like 193 would be my level on the bottom here. So I would say 201 to 193 is where the range has been. So resistance support.
Question from Gooley: Does the July durable goods number that came out matter to any tickers, Mark?
Yeah, mostly the industrials.
So it was prior -7%. This time it was 10.4% month over month, excluding defense.
Really?
Durable orders were 9.9%.
I didn't know that they were coming out today. I guess I missed something. Durable good orders. Oh, it's not on here yet. Let's go see if it's on Benzinga.
It's on Trading View under your economics tab.
So, man, gonna go save those Boeing pirates. Or pirates. Gonna go save those Boeing astronauts. JP Morgan predicts $2,600 gold. Let's see what that is all about. I mean, if the war breaks out over there, more so than it is, this is going to keep going. I mean, $2,600 gold is not that far away. It's
No,
only
I've
40
been
bucks
watching that,
there
Jonathan.
right
That
now.
looks interesting. Airbnb when you get a moment, Mark.
Yeah, now this got crushed, got really oversold, got to support, and I believe there was a big spike in the volume. So let's look at that. See, a lot of times when you get a big spike in the volume, it happens right at the very end of a trend. And it just shows a capitulation. People just get sick of, like, if it's going down, the sellers get sick of watching it go lower and they just throw in the towel. If it's going higher, the buyers get sick of watching it go higher and they just say, I'll just go buy it regardless of what I have to pay. So we got this big move down. We were really oversold. We got to support, had the big spike in volume, and really didn't have that much of a rebound. I thought this was going to rebound pretty well, but buy around 113. It probably would have gotten stopped out for a small profit here. But now I would say this looks kind of neutral. So anyway, I mean, if you were trading it, like I said, you probably would have made a small profit before you got stopped out. But that's, on the bottom there, that's what price is that? That's like 113.5. And this shows you over here. At some point I had this for doing patterns, right? So you get your reversals. Like sometimes they look like a V if they happen over a few days. Sometimes it could be a trading range. They call that the rectangle reversal. So market's out of equilibrium. When it goes into the range, it is in equilibrium. That's the first thing that could happen before it starts going the other way. Here's your rounded bottom, another V. You can get your floating island in here. This is where you get like an exhaustion gap and a breakaway gap right together. The old floating island. I don't think there's got to be a reverse of the floating island. I don't know what it's called though.
It's that hammered. No, it's the they call it the tombstone, I believe, where you've got the wick up and then the little bar at the bottom.
XLV? Oh, I don't know. Let's look at some of the Johnson & Johnson. There might be a little bit something to do here. And the reason why I'm saying that is, overbought and at resistance. So maybe a potential reversal here I would be looking for. Maybe if it drops back below, like say 163.50, that's where you think about jumping in. But there's really nothing going on this morning here. UNH, nothing going on here. Yeah, I mean, maybe watch Eli Lilly for some kind of reversal action. And the reason why I'm just bringing that up is because it's just at a former top, right? This isn't a coincidence that this is where it stalled out. It stalled out here because it was a top over here. So there's people who bought up here who regret their decision to do so because the thing fell out of bed the very next day. And now that it's back to their price, they're trying to get out of break even. You can see here, there's a breakaway gap there. There's a breakaway gap there. But after a few more days, I'm not really sure exactly how long, if this doesn't go up, some of these sellers are going to start to get frustrated and they're going to start undercutting each other. So that's why a lot of times when you get to resistance, you tend to sell off. Like there. There's your old floating island. Maybe not. But we get to resistance, we sell off. We get to resistance, we sell off. And finally, here we break out. And you can see the level that was resistance turned into support. So that sets the stage for the next move higher. Yeah, we can look at PDD, whatever that is. PDD. Is it PDD Holdings? All right, well, first, let's look at where the stock is trading. So it's down about $25. So now, if I was trading this, I would just be thinking, this is what I would be doing. All right. So this could end up being an important level because it's a former top. It's a former bottom. So there's a good chance there could be some support there again. And on the upside, you can see here what was resistance there became support over there. So this bottom level is, about 112.50. And we're trading at about 114.30. So I think it's important to watch. And you see this a lot. If there's an overreaction on the opening, and I'm not saying this is, or I'm not saying it isn't, but if it is an overreaction, people are going to start going through the news and whatever, and they're going to be like, these numbers are bad, but they're really not that bad. So I'm going to go in and buy. And look for that around like mid-morning, maybe 10:30 or so. And if it starts to rally then, there's a good chance there's going to be some continuation over the day. If the numbers are really bad, well, then it's going to go sideways or it's going to go down. Let's look at PDD. All right, so let's go to the investor relations page. PDD. So here's our conference call, which is probably over by now. And I don't see why don't they have a quarterly results. Let's look at this here. Q2. So this is going to be our earnings release right here. Yeah. So I don't know how to read this. What are these, like Rembies or Rembies or whatever they're called? The Renminbi. Yeah. So I don't really know the valuation of that, but let's just see here.
They've got your U.S. dollars in parentheses on the side of each one of those RMBs, though.
Oh, okay. Now I see. So why are these things getting crushed here? Here's our earnings statement. So total operating expenses. All right. So total operating expenses were up by, I don't, is this billions or millions? But anyway, they're up about 50%. The operating profit was up too. Earnings were up a lot. But sometimes with these foreign companies, that's sometimes stuff gets kind of lost. I mean, if I'm just looking at this, let's see where the gap is. So their non-GAAP looks really good. Non-GAAP is not generally accepted accounting principles. So the non-GAAP looks really good. My guess is the GAAP earnings are really bad. So GAAP is generally accepted accounting principles, and I don't think it's going to show them here. But yeah, so that's what would be going on there. I think their GAAP earnings are probably not that good. So this is a way you can kind of just look at that. Like say you have a company and you have a factory and it burns down one quarter and it costs you $10 million, right? And at the end of the year, your company made $30 million. So you could say, well, we made $30 million. This is our non-GAAP because that 10 million was a one-time event. It's not going to happen again. So we're just going to assume that didn't happen and we're going to report that we made $30 million. The GAAP earnings would make them deduct that from the earnings and say, wait a second, we earned $20 million. So that's the difference between GAAP and non-GAAP. And these non-GAAP numbers look really good. So you'd have to look in this reconciliation of non-GAAP measures, which I don't think is in this statement.
Yeah, it's this next page. Scroll up one. It's right in here. No, keep going. One more page. I was just looking at it. I got to it from TradingView and was looking at their non-GAAP just a second ago.
Well, we want to look at their GAAP numbers.
Oh, their GAAP numbers. Sorry.
Yeah, the non-GAPs are on here. So they're not showing the GAAP numbers, which could say something in and of itself. All right, everyone, I got to get going. Got to do some blogs this morning. But yeah, so we'll be back tomorrow, I presume, God willing.
Guys, thank you very much, and we will see you tomorrow. Enjoy a little bit of Maestro Mark Petrino on the way out.